Okay, and then next item is the annual audit.
I'm going to turn this over to Tim McGinnis and our auditor who's here tonight.
Sir, can you please step up, state your name and the company that you're with?
Good afternoon. My name is Paul Thurman. I am the senior partner with Evans, Marshall & Pease, and it is our firm that has had the privilege of doing the audit this year.
Okay. Tim, do you want to do any introduction or anything that needs to be?
This was, yeah, we, when Paul sent us a draft of the budget, the Finance Committee reviewed that, and there were a number of questions that came up as a result of that. I sent those to Paul, and he's answered those questions prior to finalizing the audit and then sending it to us, which is what we posted on Board Book. Since then, there are some additional questions that were received over the weekend. I sent those to Paul. I'm not sure quite what his schedule is and how much time he's had to review those, but with that, I'll turn it over to Paul to review the audit and answer questions.
Thank you, Tim. As to this last item, we received this in our office yesterday. I was in the field. I finally came in the office this morning, and that was the first opportunity I had to see it. I have not gone through all of it. I had assigned one of my staff seniors to review some of the items that were stuck out in my mind when I first looked at it, and I'd like to address that at this point. Mr. Walsh has pointed out some items in the prior numbers in regard to some of the numbers appearing in the management discussion and analysis, primarily in tables 1 and 2. Those changes are being made, and we will reissue the report with those corrections in it. In all honesty, my eyesight ain't the greatest, even with glasses, and frankly, some of these have been hard to read as I tried to review it. But I will promise you, I will give it all of the attention it deserves. I will get answers back to each specific item. I'm not sure at this juncture if any of these overlap the original list that I received, and Tim, help me, I can't remember who sent the first list.
They came from one of the members of our Finance Committee.
Okay.
From Mr. Richard.
I hope that our answers to the original inquiries have all been answered satisfactorily. Are there any questions regarding our response?
I would defer those to the members of the Finance Council if there's any questions or concerns from the 38 or 40 responses that we received.
Gary?
No. Just for, because we do publish this and we do have it on the web.
Mm-hmm.
There's been a change in the presentation. Is this right? I mean, we classified the balance sheet now.
Well,
and
what we did is, in order to make life a little easier for all of you, because next year, as a result of the Governmental Accounting Standards Board pronouncements number 63 and 65, there will be some major changes in the format of the balance sheet and the statement of activities. So I figured rather than I was going to try to implement it early, but I decided it'd probably be easier for the board to at least have the balance sheet format back to the way it was last year. So we changed it back, and that is what's in the current audit report that you have.
Okay. And then the second item was the fact that with Cook County funding our property taxes, there gives the appearance that we've got flush with cash. Could you explain, just so people look at?
Yes, I think probably the simplest way to see it, for those of you who have an audit report, I'm going to call your attention to page 40, which is a general fund, which is a combination of the educational account and the working cash account. The budget for the general tax levy was $14,601,000. The actual revenue turned out to be $21,023,794. And the reason for that is that for the first time, I'm going to believe I'm pretty close, 20 years, the County of Cook has gotten the second installment of the real estate taxes out on time. And as a result of it, because District 208 is on an accrual basis of accounting, we are required to recognize for governmental funds all receipts of monies within the first 60 days following the end of the year, which brings us to August 29th. And within that period, we receive substantial amounts of money which are being recognized in the government-wide or the governmental fund statements. That would be the government, the educational fund, the O&M fund, the debt service, transportation. All of our tax-supported funds will show substantial amounts of money over and above what was budgeted because of that. I don't like to make predictions, but I'm willing to bet it'll probably be another 20 years before it happens again. So as a result, when we do the audit next year, you're going to see, unless they do it again, you're going to see probably a large deviation downward in the amount of revenue that is going to be recognized in fiscal 13 versus fiscal 12.
Appreciate you're going to fix the editorial, but one substantive question on note 2, and you made a similar comment last year. It has to do with custodial credit risk. It says the district is, that's the credit risk of the bank in essence failing while our money's in it. But you said we don't have a policy for custodial credit risk. Should we have a policy? Are you recommending that we should have a policy and we don't?
Number one, the custodial credit risk that is reported in the notes of financial statements refers only to the district's funds that is under its control, not the treasurer's office,
right.
Strictly this school district here. What is at risk, or what we call a credit risk, is any amount in excess of the FDIC requirement or coverage, which is $250,000. One of the things that you can do is to require your institution to pledge additional collateral in the name of the district for the excess. The second would be to, frankly, put it in a separate bank account, a second bank, so that no one bank has more than $250,000. That would eliminate the quote-unquote credit risk problem.
Tim, this is primarily our activity fund money then?
Yes.
Because our fund balances and all those dollars are maintained by the treasurer, correct?
That is correct, sir. And those are, I will tell you, since we do the audit for the township school treasurer as well, I can sit here and tell you that all of those funds are completely secured either by FDIC or additional insurance or our U.S. government or state obligations, which are fully covered.
Tim, on average, what do we have in activity accounts, approximations? Approximately, I should say.
I would say we run between $250,000 and $300,000. It's up in that neighborhood.
Okay.
Yeah, at the end of the year, we had $316,000 in the student activity funds.
Well, it said in your note that the district's bank balances were $419 and we had
Okay.
$169,000.
That's a very good observation. The credit risk note is based upon the amount of money the bank shows that it has. Obviously, your amount is less because there are checks that have not cleared, et cetera, just like your home bank account. So that credit risk note is based solely upon the amount of money that is shown by the bank on its bank statement and on the confirmation that we receive as well. That is the benchmark for the credit risk.
So in the schools that you audit, what do they usually do to avoid this custodial credit risk?
Some of them just accept it. Others have gone to their institutions and asked for additional collateral to be pledged. And the important part is that it be in the name of the district, not in their trust department, or it's just pledged in general. It has to be a pledge specifically for the funds of District 208.
Any other questions?
Do you think we should look into this, Gavin?
I think it's worth further discussion.
I think it's something too that if we move towards, I think the policy committee should maybe establish a policy on that.
Paul, can you please send us a written response as you did to the responses from the Finance Council's questions, so that I can distribute those to the board in the next couple of days when you have time. When you have time.
Copies, but I will. I have what I did, or what we did, is we took all of the questions, listed the question in bold, and then showed our response below.
I have those, and I could forward those out to the board. That was to get the draft you were talking about tonight ready. I'm saying the additional questions you received on Monday.
There are some additional ones that I need to get into.
Right, I'm saying when you get time, can you please put those in writing like you did?
Absolutely.
And I will distribute them to the board.
Absolutely, and as I said, there are some incorrect numbers, for lack of a better term, in the MD&A. We're going to make those corrections and reissue the audit report with all of those corrections in it.
Do those impact the AFR as well?
No, it will not impact the AFR.
Okay.
It's all, actually, strangely enough, they're all in the prior year numbers. The current year numbers are all kosher.
Okay.
Can you make sure that when we get that, Tim, that we have that for our committee of whole meeting? Committee of whole meeting.
Yes.
And when is that?
November 27th is that meeting, so I would need it the Thursday before, which I believe is Thanksgiving.
If you're here, I'll have it for you. No, I will have it for you.
Electronic copy to Tim is fine.
Yes.
He'll take care of copying it and distributing it.
Yes.
Okay? Does the board have any other questions for Paul?
To Mr. Walsh, is there any way that we can make this a little larger? I wonder if we can enlarge this through the email. I haven't tried to, but I'm hoping we can make it a little bigger, because while the numerals and numbers are fine, the arrows to which you point to, the little notations.
I'll send Kevin one tonight.
Okay. I'll forward you a larger copy.
It'll be great, then I can get on it right away.
Okay.
I will do that. You will have them before your committee of the whole meeting.
Okay, one more question?
Just to kind of focus in on what's on the screen there, which is again on that page 40 that Mr. Gritchen identified. Right there, it's saying our budget was $14,600,000, but we collected $21 million. And basically, that's because the first time in a long time, the county required property taxes due August 1st.
That is correct.
Which is the due date when they usually should be. However, they haven't been for many, many years.
That is correct. And I believe, Mr. Walsh, you questioned last year about a small amount of deferred taxes, and that has been the norm up until now, that there would be a few dollars that would come in that 60-day window. But this year, with an August 1st due date, it does show that you're flush with cash.
And it shows we have approximately $7 million of excess revenue, which is really received in the next year. But for the accounting governmental standards, it's pulled into this year.
Yes.
Now, next year, if we do August 1st again, which, no one's holding their breath that that'll happen, we might show a number in the 14 million and receipts in the 14 million, just on the timing of the number.
Yes, it is possible.
But however, if you, as you alluded to, if we don't get the money till after the days when it's pulled back into the financials, say we go October 1st or November 1st again, something like that, we could be looking at the same type of thing where we had budgeted approximately 14 million, but we may only show on our financial statements for this purpose $7 million.
I don't think it'd be that drastic. I think it depends how you how you want to anticipate whether the county will in fact stay on track or will not. If you think that they will not, then your amount of receipts will be down, and you are correct, because all you're going to have is the remainder of the second installment above that we have recognized already, plus your first installment of February, or March 1st. So if the second installment does not come out until, with a due date of, I'll make it easy, September 1st, which is beyond the 60 days, you will see a difference that goes in reverse.
Could be 6 or 7 million. And when we budget for the cash basis and what we're gonna receive during that year.
Tim, correct me, I believe that we budget on an accrual basis?
We budget the taxes on a basis of, so fiscal 2012, only, the budget only includes the taxes we would have received in March. It doesn't include taxes that we would have anticipated receiving in the fall. There are other items like grants and things like that that are on an
Okay.
accrual basis. And reimbursements from the state.
So our
those
budget's
types.
pretty level, but you could have, we have a dip up and we could get a dip down
Yes.
to correct it.
Yes.
Thank you.
I know there was one question that I saw, and I think was in the first letter. It said, how come there's no federal aid? Last year, the federal aid was a ARA disbursement to the district. The ARA funds, in all the audits that I've performed this year, have all but dwindled away completely. It looks like it's over. So, and I've had some districts with as big a difference between last year and this year of a couple of $1 million in ARA money that is now gone away.
Any other questions? All right, thank you very much.
Thank
we
you, and I'll
look
get
for
this
you.
response on my second one as quickly as I can.
Thank you.